the key areas is using blended finance, right, to help solve some of these complex environmental problems that are being faced overseas as well as in New Zealand. Can you explain a little bit more about what blended finance is and some of the examples that you would include within that?
Blended. And now we know that actually finance and investment are major levers for our ability to put these solutions in place. And so it's continuous evolution, I would say, and really innovation and discovery as to how do we attract more finance and investment in our search for solutions to nature and environment. And blended finance is essentially a strategy where we combine different sources of finance. So in other words, you may use government funds and finance combined with private sector or from philanthropists, which, in general have shown a major interest in conservation and biodiversity, to be able to put in place the solution, at times also to de-risk the investment in a particular project, and, take forward, make sure that solutions don't remain just design on paper, but actually we bring them to reality. We found in our own experience that blended finance has been the most effective approach, sometimes not necessarily as a parallel approach. In other words, using at the stage of solution design, using different sources. Often we apply that, but in other cases we've used, for example, government finance or grants in the early days of a solution design, and then we shifted into a more commercial source of finance, for example, working with investors that expect a return at a later stage. So all of this combined give us this, what we call a blended finance strategy approach.
So that takes the pressure off that sort of government funding, which there are many organisations that are seeking government funding, and it means that it takes the pressure off so others can seek those funds. And when we create solutions, we can use other methods for funding some of the restoration work that we do.
Correct. And I would say that typically, there are different objectives why we are using blended finance as a strategy, but one of which is, of course, the ability to attract more private sector finance, but also investment, which, it can be used to decrease risk, to attract more donors and so on.
So EnviroStrat has taken lessons from overseas. It's also, through its advisory work, given advice to others, and then it's created its own ventures to bring solutions to the table as well. And one of those is Aura Reefs and the nature credits as part of the Aura Reefs project. Can you explain a little bit more about that and what that will bring?
Aura Reefs is an example in which, we devolve, shall we say, these big concepts that we're talking about, nature finance, nature markets. And when we focus in on a particular context, an ecosystem, a situation, so on, where we're trying to come up with solutions. With Aura Reefs, our focus is on Hauraki Gulf, and this is an amazing taonga for New Zealand. It is also a body of water in New Zealand that has been under immense pressure for decades now, and where we can see both the loss of biodiversity and how it happens, but also the impact on communities, including on our on Maori communities and what it means for our culture. And so therefore, in our case, we focus now, we are based in Auckland. We live by the Gulf, we all interact with it. So it's a good goal for us to try and, through the Aura Reefs initiative, to really figure out how do we put in place some of the solutions that the Gulf and other groups working for the protection and conservation of Hauraki Gulf, how we can make that happen. And part of our work within Aura Reefs is really to test what we call this prototype for a marine nature credit. That is intended to tackle the issue of kelp loss And for that, we're looking, for example, at interventions on rocky reefs in particular, where we have an extent of Kina barrens. Again, one of the effects of imbalancing ecosystems, because we've overfished some of the predators, and now Kina are kind of taking over and creating havoc for the wider ecosystem. But also at times looking at whether in some cases we in fact need to intervene beyond this when we look at artificial reefs deployment, especially for sandy bottoms, which is the only way of actually recreating habitat. And so with the prototype, we're currently focusing on Motulikalika Island as a place-based where we, on the one hand, test some of our approach. We understand better how to do this because we're talking about marine environments. We know much less about how to do restoration, the cost, the recovery times, while at the same time working on this methodology that will make the connection between what we do in nature and those investors that are willing to, to put finance and investment to support with this restoration effort. So we need the instruments by which we can attract finance for the endeavor. And we believe that we're making very good progress. We've determined what metrics we're going to use, how to measure the change from what baselines. And what type of how do we demonstrate the additionality of our efforts? How do we deal with aspects of permanence? If we remove Kina from a barren, and we have recovery of kelp, if the wider ecosystem is not in balance, if we continue having runoff from land and sediment, if we continue overfishing, will we maintain the outcome? So these are the sort of our aspects that we tackle with the methodology development that we believe once developed, it provides this trust and confidence for markets, to place their capital in the outcome we are pursuing.
Nature credits. Can you explain a little bit more about what exactly that is?
So nature credits is a certified, verified unit of nature positive outcome. So essentially, how do we verify that at a project level, solutions level, we've delivered an outcome that can be monetized? So it becomes a mechanism by which we can attract investment from government, from individuals, from businesses. This is why nature credit is such an important instrument in our toolbox in terms of making the connection between a real and measurable outcome and those that are willing and interested to invest in that outcome.
And the outcome being, for example, biodiversity uplift?
Absolutely. It can be biodiversity uplift or net gain, as we call it. This is perhaps the outcome that we're the most keen on because that really shows how we've improved from a particular baseline. But at times, these nature-based credit mechanisms are also being used as a way of attracting investment that will ensure that we avoid degrading further an ecosystem. Mm-hmm. So we call this avoidance of degradation avoidance. Mm-hmm. It is as well very important, but it requires a lot more science. It's a lot more modeling to be done to say, well, if I'm doing X, Y, Z, and I'm still not better than I am at the baseline, have I had any impact? And sometimes the answer would be yes. It would have been much worse if we didn't do it. Mm. And it's also, I think with nature credits, perhaps it's important to say that it is a market, we call it a market-based mechanism. Because we have this factor of investment and, essentially monetization of that unit of outcome. Mm-hmm. And so it's important for us, for markets, broadly speaking, not just for nature and biodiversity, for them to function well, we need to have a lot of trust and confidence in their integrity. Mm-hmm. So therefore, the fundamentals of this trust is often the measurement. Mm-hmm. And the ability, to do it based on science, based on evidence, regular monitoring, and verification by independent parties. So all of these are, elements that are critical in relation to the value of that nature credit.
So it's more than just a donation to a good cause. It's an investment into a solution that's then measured and reported back on.
Exactly, and whose value? And this is perhaps an interesting point to make when we think, especially of the a form of nature-based credit, which have been carbon credits, for example. What we notice with that market is that because the interest in carbon sequestration or emissions avoidance outcome has been so big for a number of reasons, we've also seen subsequent trading of that unit of outcome, sometimes at a higher value and so on. So this is, for investors, makes the entire proposition more appealing. But with nature credits, what we're trying and where the focus is really establishing these fundamentals around integrity and having very high principles for integrity, anywhere from the measurement through to the importance of community involvement and indigenous groups, all the way through how the market functions, transferability and transparency in the market.
I've heard you talk about the biodiversity finance gap. Can you explain what that is?
So globally, we don't have numbers for New Zealand, but globally we estimate that we'll need somewhere around 700 billions a year to be moved towards, biodiversity supportive economies, 200 of which represent new money. Now, in New Zealand, we don't have a magic number for that. We don't know exactly what is the biodiversity finance gaps, but currently there are a number of efforts that are looking to determine exactly not only what is the gap if we were to achieve some of our aspirations in relation to biodiversity outcomes, but also how can we fill that gap? Because it really is one thing to be able to quantify the gap, and it's, on quite a way more challenging to be able to say, how am I going to fill in that gap? And partly when we think about, nature credits, for example, is just one of the tools, one of the instruments that we believe can make a contribution towards finance for conservation and biodiversity. Not the only one, and not sufficient, for sure. We're having often this discussion of how do we make nature visible to our decisions. And one of the things that we need to do is actually putting a value on nature. That doesn't necessarily mean always putting a price on nature, but we need to have a value on it so that we know, what it takes, to achieve those goals, but also what it means if we actually lose that nature and ecosystem services. Yeah. So valuation, I would say, it's a much more of a critical way of looking at things, and making nature visible to our decisions. One way of which is, of course, monetizing it.
The New Zealand conservation community has largely relied on grants from the government and couldn't afford to do what they do without those grants, or would be reducing what they do. So this is another tool that will open up opportunity.
What we see now, sustainability-linked loans as well as bonds is one of the instruments that quite a few banks in New Zealand now are using to incentivize, but also reward environmental performance. So if you are, a landowner or farmer that want to improve and invest more in riparian planting or creating habitats and so on, you have the ability to get better terms of lending by pursuing these goals. Other instruments that we are seeing as well is actually creating thematic bonds. New Zealand government, for example, is one of the first countries that has used sustainability bonds, which covers things like our waste minimization efforts and our marine protected area management and so on through DOC. Other instruments which are interesting, and we are yet to kind of test them. We see that some of the developing countries or transition countries are using what we call debt for nature swaps. In other words, if you have a big debt that you can't afford to pay back, some of the countries and the lenders are willing to make concessions so that you don't return that debt, or you use the interest you would have paid on it to finance conservation and protection management activities. You know, these are the sort of instruments that we could apply in New Zealand at a smaller scale to deal with some of our biodiversity loss issues, wetlands creation, you know, adaptation to climate change, and so on.
Sorry, so just on that, Cerasela, the example might be farmland perhaps that gets retired because, you know, it's marginal with climate change. And so if the farmer chooses to restore it into a wetland, then the benefit to the wider community from that is shared.
That's right. So, you know, potentially we could have a situation in which, let's say, in one of our catchments that are at high risk from flooding because of sea level and, you know, a number of other conditions, farmers would be looking at exit strategies or a way of actually, you know, retiring some of the land that they have, which is at high risk of flooding, lost productivity, and so on. Often they don't have the ability to do this because, you know, to own the farm, you perhaps took on a lot of debts, you bought it from family, and so on. So there are this social context that really matters, and we're trying to think through how can we make this economic transition almost easier for landowners, for asset owners, recognizing that, you know, if we could retire, though I don't necessarily like the term retiring because it sounds as if there is no value to that land, you're retiring it. But actually, if we put the land into a new use, so for example, recreating historic wetlands that can, on the one hand, support flood mitigation, but they can also capture sediment, they can capture nutrients. They are, in fact, a wealth of biodiversity. They, you know, they are a habitat creator, so they have biodiversity value. So if we can value this new type form of asset, that will enable us to support, you know, the transition of the land use, and without necessarily putting this economic pressure back on the landowners. So we offer a strategy for landowners as well to navigate the challenge.
Recognizing the benefit that they bring, infrastructure protection as well. So roading infrastructure, you know, councils facing flood inundation in areas where there's, you know, land that could be better utilised in nature.
Okay, correct. And not only that we're faced with this, you know, increasing hazards, risk, but also dealing with them. So, for example, if you think about drainage schemes and so on, but, you know, it's one of the mitigation infrastructure that we've had in place across New Zealand. They're increasingly very expensive to run. We need a lot more energy and so on, so they become expensive for farmers as well. So if we can find these hybrid nature alternatives, you know, there are lower cost of dealing with issues while we also increase biodiversity at the same time. We know that, you know, these are some of the tools in the toolbox that we are playing with, and you need to determine which of these, you know, methods, mechanisms to use. In our case, we determined that we want to focus on this idea of marine-based nature credit. It's even newer than it is on land, so we're almost taking on a double challenge in doing so. But we hope that, you know, if we manage to develop such methodology, then, you know, it will enable not capture of, you know, support with investment for the work we are doing, but really supporting other groups. And we across the Gulf, that, you know, we all work towards the protection and conservation and reversing some of the degradation trends that we've seen for decades now. So this is really, you know, for the collective, what we're trying to do.
That's great. Amazing. Yeah.